Asian markets. Asian markets, including Seoul, Tokyo, Shanghai, and Hong Kong, reported declines. Regarding China, China's trade metrics indicated a YoY decrease of 8.8% in exports and a contraction of 7.3% in imports for August. However, this marked an improvement from the previous month's figures. China's trade surplus for August stood at $68.36 billion, down from July $80.6 billion. Stock indices like the Shanghai Composite and Shenzhen Component witnessed decline, and Hong Kong's Hang Seng followed suit. An impactful decision by the Chinese government was to halt the use of foreign-made devices by its officials, which impacted shares of several Asian tech suppliers. Even with some data showing signs of improvement, China's economic metrics remain close to historic low. Japan. Tokyo Nikkei 225 saw a marginal dip. The Bank of Japan expressed its intention to maintain its lenient monetary policy and hinted at coming economic stimulus measures, targeting company wage hike and energy cost reduction. The Japanese yen recorded a minor rise. Persistent ultra-loose monetary policy from the Bank of Japan has been exerting pressure on the yen. India, the Nifty gained 0.59%. Bank Nifty also observed a positive movement, increasing by 1.06%. Significant contributor to this uptrend was the PSU Bank and the related stocks. However, FMCG and farm stocks saw corrections. Among major market players, Mahindra and Mahindra, Bajaj Finance, and others lagged, while companies like Maruti and State Bank of India posted gains. A rising concern in the financial sector is the Brent crude surpassing $90, potentially affecting India's macroeconomic stability and inflation rates. Moreover, foreign institutional investors divestment equities. Thailand. Thailand's inflation, as represented by Consumer Price Index, increased to 0.88% YoY in August. However, economic growth and inflation forecasts for 2023 were revised downwards, mainly due to underwhelming export and tourism revenues. Philippines. In Philippines, the consumer price index rose by 5.3% YoY in August, a hike from previous month's 4.7%. Malaysia. Post the decision of the Bank Negara Malaysia to retain the current interest rate, and the Malaysian ringgit remained steady. However, having depreciated by over 5.8% this year, it stands as one of the weaker Asian currencies. Global insights. The economic market remains unpredictable, presenting both potential risks and opportunities. Asian markets. Asian markets including Seoul, Tokyo, Shanghai, and Hong Kong reported declines. China. China's trade metric indicated a YoY decrease of 8.8% in exports and a contraction of 7.3% in imports for August. However, this marked an improvement from the previous month's figures. China's trade surplus for August stood at $68.36 billion, down from July's $80.60 billion. Stock indices like the Shanghai Composite and the Shenzhen Component witnessed declines, and Hong Kong's Hang Seng followed suit. An impactful decision by the Chinese government was to halt the use of foreign-made devices by its officials, which impacted the share of several Asian tech suppliers, even with some data showing signs of improvement. China's economic metrics remain close to historic lows. Japan. Tokyo Nikkei saw a magnificent dip. The Bank of Japan expressed its intention to maintain its lenient monetary policy and hinted at upcoming economic stimulus measures, targeting company wage hikes and energy cost reduction. The yen recorded minor rise. Persistent ultra-loose monetary policy from the Bank of Japan has been exerting pressure on the yen. India. The Nifty gained 0.59%. Bank Nifty also observed a positive movement, increasing by 1.06%. Significant contributor to this uptrend were PSU Bank and realty stocks. However, FMCG contributed to, to this up. FMCG and pharma stocks saw correction among major market players. Mahindra and Mahindra, Bajaj Finance, and others lagged, while companies like Multi and State Bank of India posted gains. A rising concern in the financial sectors in the bread crude surpassing $90, potentially affected India's macroeconomic stability and inflation rates. Moreover, foreign institutional investors divestment equities. Thailand. Thailand inflation, as represented by the Consumer Price Index, increased to 0.88% YoY in August. However, economic growth and inflation forecasts for 2023 were revised downwards, mainly due to underwhelming export and tourism revenues. Philippines. In the Philippines, the consumer price index rose by 5.3% YoY in August, a hike from previous month's 4.7%. Malaysia. Post the decision by the Bank of Negara Malaysia to retain the current interest rate, the Malaysia ringgit remained steady. However, having depreciated by over 5.8% this year, it stands as one of the weaker Asian currencies. General insights. The equity market remains unpredictable, presenting both potential risks and opportunities.